Hello and welcome to Luxurious Prestigious.
Hey, it's your boy.
Here on our channel, we are offering an amazing opportunity for everyone to enter and win huge cash prize giveaways.
I want to win the thing, Mom!
The more videos you watch in full, like them and comment on them, the more entries you will have in the draw. So don't wait any longer and join us now for your chance of winning $100,000 and more. For more details on how to join, go to the description section below. Hey there, luxurious people! Don't miss your chance of winning $100,000. Subscribe now to Windy.
I'm out!
The top hedge fund manager on Wall Street, David Tepper. Part 1. America's top hedge fund manager. Tepper is one of the highest paid hedge fund managers in the world. And according to Bloomberg, his net worth is currently $16.2 billion, making him the 104th richest person in the world. He also owns a Charlotte football club and the Carolina Panthers.
I'm great at my job.
So how could a timid youngster from an ordinary upbringing build one of the biggest hedge funds in the world and eventually become one of the richest men in the world? Let's investigate. Share, comment, like, and subscribe to Luxurious Prestigious. And don't forget to have your notification bell on for more updates.
We're gonna have to dig deeper into this.
He established the Appaloosa Hedge Fund in 1993. Since then, his fund has produced an average annual return 25%, much exceeding the average return on investment for hedge funds of only approximately 7%. David is now the 104th richest person in the world, according to Bloomberg, and constantly ranks among the highest paid hedge fund managers in the world.
I guess we're rich now.
His net worth currently stands at $16.2 billion. Along the way, David Tepper, the top hedge fund manager in the United States, tells his story. Early years.
Once upon a time,
When David Tepper was born in 1957 in Pittsburgh, Pennsylvania, he was the second of 3 kids. Tepper was raised in Stanton Heights, a lower and middle-class area, and had an extremely typical childhood. David didn't come from an affluent household. His mother, Roberta, was an elementary school teacher, and his father, Harry, was an accountant in Pittsburgh.
Really?
David was quiet and reserved as a child, but he was always incredibly intelligent. Tepper was very good at mathematics, even though he could hardly speak at the time. His older sister opted to enroll him in her second math class when he was just 4 years old because he was considered a math prodigy, showing off his multiplication and addition skills in his 3rd grade show-and-tell skills.
What a genius.
David also developed a sports obsession during this period, and Tepper recalls that he frequently played football with his buddies, played touch football on the sidewalk, and tackle football in the adjoining cemetery, where they tried to avoid running into the gravestones.
Well, that is one wild, elaborate theory, Chief.
David grew to be a huge fan as well. He reportedly knew every major league player when he was a kid, since he played a lot of baseball. If you take the baseball card out of his collection, you'll see their leagues and statistics. He has the players' statistics in his collection, which is fairly astounding. This, in Tepper's opinion, was the beginning of photographic memory.
I'll show off this ring.
Tepper was once a modest math prodigy, but by high school, his personality has significantly changed.
To blow up is undeniable.
David became much more outgoing, was known as a popular class clown, and still possesses a great deal of self-confidence today. However, as confident and intelligent as Tepper was, his abilities in the classroom didn't translate. And while he was a student at Peabody High School, he never received an A. This wasn't because he was a poor student. Rather, it was because he lacked the drive to achieve good grades.
You're gonna go far. I can feel it.
Despite not showing much interest in his official studies, David did begin to take an intense interest in equities. Tepper would monitor his father's investments holdings and communicate his investing lessons with his high school teachers. When David was a junior in high school, he made his first investment by paying $2 per share for 100 shares of a company called Career Academics. This was arguably Tepper's worst investment of his life, and shortly after, the company filed for bankruptcy. Still, Tepper persisted in following his newfound passion.
I'm just ready to move on.
Tepper chose the University of Pittsburgh, where he studied economics for his undergraduate studies while staying in his home state. Tepper took action here, being the one paying for it and taking much more seriously his education. Because of this, he nearly always had an A, which was the complete opposite of high school.
You are amazing.
Followed a short while later in, Tepper finished with honors from his bachelor's program in 1978, graduating summa cum laude. After graduating from college, Tepper started working as he received his training at Equibank in Pittsburgh as a credit and securities analyst, his first experience with the actual corporate world. Additionally, Tepper started to get more involved in the stock market, and he started dabbling in trading while employed by Equibank.
Quite a lot of work.
Tepper had a plan in place where he would buy options to profit from minute changes in the market. Tepper would place orders at the 16th of a point and sell them at an 8th of a point, then keep the money that was saved. Up until 1982, when the market crashed, Tepper was able to generate a few $1,000s a year, thanks to what turned out to be a reliable source of income. Tepper opted to enroll in Carnegie Mellon for his MBA program, paying for it with trading profits.
Invest in yourself.
After leaving his position at Equibank after only 2 years, Tepper finished his formal education in 1982 when he obtained his MBA, but his true education had only just begun. After Tepper graduated from Carnegie Mellon, he would work for the finance department at Republic Steel in Ohio, a financially troubled corporation.
We've got a big problem.
Consequently, Tepper was added to the junk bond market, a sector of the economy at the time that was booming. Traders who were seeking high profits frequently turned to the trust bonds market, where it is possible to trade high-yield corporate debt. Tepper had a thorough understanding of the sector, thanks to the high default risk and the fact that Republic Steel was on the verge of bankruptcy. 2 years later, Tepper found this experience to be priceless.
You earn it.
He would deal with trust bonds once more when he accepted a position as a credit analyst at Keystone Funds in Boston. Tepper began to establish a reputation for himself in the business at Keystone. And a year later, at the age of just 27, he was hired by Goldman Sachs in New York. David held a great position for someone his age at the brand new junk bond desk that Goldman was setting up. David was given the opportunity to become the desk's head trader after just 1 year because of Tepper's quick success in the position.
Now it's getting good. Now I feel it.
Actually, Tepper was bringing in so much cash for the business. They issued him a check for $600,000, which in retrospect, David claims wasn't nearly enough in comparison to the amount of money he was earning for the business. But all of Tepper's trading success occurred when stocks were rising steadily, year after year, which explains why. Therefore, experiencing a bear market was intended to be the true test of Tepper's trading abilities.
Not enough, not enough, not enough.
So when 1987 arrived, the Black Monday crash, in which the Dow Jones plunged by 22.6% in a single day, was the primary cause of the catastrophe. The market was in complete disorder during this time, and almost every trader lost money. However, Prior to the crisis, Tepper made a genius decision and shorted the market with his entire portfolio while holding no long bets. Because of this, Tepper made Goldman a fortune both during and after the crash, earning him a reputation as one of Wall Street's most astute traders. Just a few years later, in the 1990s, Tepper continued to demonstrate his sharp senses. During the savings and loan crisis, he bought bonds from some of the banks that had been devastated by yet another disaster. As these banks started to recover from bankruptcy during the following years and the market started to recover, the value of these bonds surged. As a result, at a period when Goldman was having trouble, Tepper brought in millions of dollars, and many people credit Tepper with being a key factor in Goldman Sachs' survival.
Honestly feels like a miracle.
A significant milestone was made at this time for the 33-year-old Tepper. Since David joined Goldman in 1985, things hadn't always gone smoothly for him there, since he had never quite fit in with the company's principles. Tepper was a boundary pusher. He was very self-assured and outspoken, and unlike many of their employees, some didn't think much of him as a note at all. The finance team didn't like him because he didn't make the trades they wanted him to.
Oh, well, whatever.
And the boss of his division, John Carzine, didn't like him since David never spoke to him. The risk arbitrage desk didn't like him because he took her trades away. Tepper was consequently passed over by the business for partner roles in 1998, even after all he had accomplished for the business in 1990 and 1992. David was making the business a ton of money, so this greatly enraged him. So he left Goldman after 8 years of service.
Okay, goodbye.
Appaloosa. Tepper quickly contacted renowned mutual fund manager Michael Price after leaving Goldman, and Price agreed to lend Tepper a desk in his office. Here, Tepper started trading aggressively with his personal account in the hopes of amassing enough capital to launch his own hedge fund. Within 6 months, he turned his $3.5 million into $7 million, thanks to this strategy's flawless execution.
It clearly paid off.
Now that David had enough cash to start his own hedge fund, he decided to team up with Jack Walton, who also utilized to work the junk band department at Goldman. In addition to David's $7 million, they raised a total of $57 million to manage. And in 1993, they would open up a new hedge fund called Appaloosa Management, marking the beginning of Tepper's legendary hedge fund career.
Let the games begin.
Appaloosa would immediately find success, and in their first 6 months, the fund returned a massive 57.6% as David once again focused on distressed debt. This early success attracted a lot of money, and by 1994, Appaloosa's assets under management ballooned to $300 million. Tepper kept spotting unusual opportunities, and in 1995, when Latin America was in debt, in times of crisis, he created some significant positions in Venezuela, Brazil, and Argentina.
So are you good with money?
Shortly after the market took off and money began to pour back into these nations, Appaloosa was able to achieve a 42% return that year. 2 years later, in 1997, Tepper made another fantastic international bet, only this time in Korea.
You nice, keep going.
At that time, Korea won had behind the Asian financial crisis by 50%. Tepper became the first company to do so by investing in currency futures and government bonds. Appaloosa made a 30% return that year as a result, and they continued to outperform hedge funds year after year.
I like to spend money.
At one point, they had $800 million in assets under management. Tepper appeared to be invincible to any opposition. David would, however, shortly learn what makes the hedge fund sector so challenging. David staked that Russia wouldn't default on its debt in 1998, which it did, causing the fund to decline by 29% that year, making 1998 the worst year in the fund's history.
What I could buy with that money. Now it's down.
David didn't panic, and when Russian bonds continued to decline, he decided to repurchase, which sounded absurd at the time, when Appaloosa was obliged to liquidate their holdings, and Tepper questioned whether they would survive. Tepper argued that this action was similar to minting money at that time. As the Russian market recovered in 1999, his conviction paid off, and Appaloosa returned 61%. David made one of his finest and worst trades ever during the dot-com bubble in 1999, which will be another intriguing period for the company.
We're taking risks, is what we're doing.
Tepper shorted the Desc in what would have been a brilliantly timed play, but owing to investor pressure, he covered the position in 2000, a few months before the crash, which he considers to be one of his worst investments ever. But Tepper discovered a crucial lesson. Always make your own financial decisions and disregard the advice of other investors. Tepper recovered nevertheless, and in 2001, Appaloosa returned 67% in contrast to the S&P 500's negative 13% return.
I decided to rebel tonight.
Tepper would suffer a further blow from the Appaloosa decrease by 25% the next year. And in 2002, as the junk bond market crashed after the dot-com bubble. But Tepper rebounded once more. In 2002 and 2003, he bought the distressed debt of three of the biggest bankruptcies in history: Enron, WorldCom, and Conseco.
I feel really good about that.
These businesses were able to avoid bankruptcy, which enabled Appaloosa to produce an astounding 149% return in 2003. Tepper made $500 million on this trade for himself, making him a billionaire in his mid-40s.
That's nuts. Especially, that's crazy. Okay, all right.
This was also highly successful for Tepper personally. They were averaging returns of roughly 30% per year, which was impressive for a hedge fund at the time. But 2008 would be Tepper's last year. At this point, Appaloosa was well known, and everything was volatile.
It's getting tough now. I'm not gonna lie. Even for a Fijian girl.
The greatest chance yet, as the United States was on the brink of a financial collapse.
Fasten your seatbelt.
That concludes the first chapter of David Tepper's biography, one of the world's highest-paid hedge fund managers. How far along in his life story have you gotten? Tell us by leaving a comment below. Stay tuned for the concluding chapter of his motivational tale. And hey, before I go, be sure to watch some of our other motivational movies on our channel. I appreciate your interest and hope to see you at the conclusion of the story. Thank you.